So is China, one financial crisis away from catastrophe politically and economically?
Hello, everyone. My name is Yeling Tan. I'm a professor of public policy at Oxford University's Blavatnik School of Government. And on behalf of the National Committee on US-China Relations, it is my great pleasure to be speaking with Meg Rithmire, the F. Warren McFarland Associate Professor at Harvard Business School, about her new book, Precarious Ties, Business and the State in Authoritarian Asia. So first off, I wanted to congratulate you, Meg, on the publication of this book. I absolutely loved reading it. I thought it was very provocative and eloquently expressed. It's hard to get a balance between expressing theoretical richness while also being accessible to a broad public audience. And I think you managed to strike that balance in a really admirable way. So I thought it was super inspirational. I thought this book was also really timely because of all the changes going on in China's economy and China's financial system recently. So I'm super excited to be chatting with you about this really important book.
Well, thanks for your kind words about the book, and thanks for taking the time to do this. I know you're busy and reading through it. It's not a short book, so thank you for reading through it and for your enthusiasm about it.
It didn't feel long at all. So let's jump into kind of the big picture of your book. Tell us a little bit about the central question that motivated you as you wrote this book, and why is it called Precarious Ties?
Precarious Ties is the title, and it's named that way because the fundamental idea in the book is that state-business relations in authoritarian regimes are fundamentally unstable, dangerous for both sides in many cases for a variety of reasons. And that's really what the book explores. And it was motivated in many ways by my own dissatisfaction with concepts like co-optation and cronyism. So as you know, a generation of research in Chinese political economy and Chinese politics has really asked the question, why is it that China under the Chinese Communist Party, the CCP, has been able to develop markets and a sector of private entrepreneurs, and those people have not clamored for political reform? And so this kind of classic idea in social science assigns this role to entrepreneurs that once they accrue economic power, they start to desire political power, at least security of their political status, and then they prefer democratic reforms. And that mostly comes from research on the democratized and developed West, and in many ways is a statement of how the process happened in the West rather than a prescription for how it ought to happen everywhere. But in any case, scholars of Chinese politics have asked, why has this happened such that they have not seemed to demand democratic reform? And not only in China, but elsewhere. So the contemporary view of business elites in authoritarian regimes in Asia and beyond is that they're more likely to be cronies and people who support regimes in power rather than people who agitate for political reforms. And so what was dissatisfying to me was that if we just assume or even argue that entrepreneurs have been co-opted, it doesn't seem to explain a lot of what you might think of as the kinetic activity between business elites and the state. So there's a lot of drama, actually, as you said in your opening. The present crackdown on the financial sector, the crackdown on quote unquote everything, in Ling Wei's terms from the Wall Street Journal, that she dates to 2020. I really think it started in 2016. But the idea that, in fact, it's not always these cozy relationships. There's a lot of danger inherent in that relationship, and in what we think of as cronyism and co-optation, and a lot of variations. So we call a lot of regimes and a lot of relationships between business and political elites in different places crony, but then it doesn't account for then why those elites turn on one another during critical moments. And so that's what I wanted to explain and unpack and add some more sort of theoretical granularity to how we think about different modes of state-business relations in different kinds of regimes.
That's great. Thank you so much for unpacking that. And I think casting it in terms of instability gives us the scope to explain why things have changed so much, right? And what was interesting to me is that you have put together a book that takes us all the way back to the founding moments of these regimes and yet have so much relevance for politics in China today. So I wanted to take a step back and ask you a little bit, why did you go back to the founding moments of the People's Republic of China when you started investigating state business relations?
That's
Why
also a
was it
great
important
question.
to go back? Sorry.
Great. No, that's also a great question. I didn't expect to do that when I started working on the book, but I felt that I had to based on what I was learning about the present. And so, as you know, the book is also comparative. So I'm comparing China with Malaysia and Indonesia, and I'll just focus on the argument about China, which really is the heart of the book. It takes up half of the book, and my own specialization is, of course, in China, although I was really enriched by learning about Indonesia and Malaysia and doing research there in the process of working on the book. But just to explain why it's a comparison, the book really started gestating in 2015 when there was a stock market crisis in China. And I was in China at the time and talking to a lot of entrepreneurs who were saying, oh, it doesn't matter. I was just gambling with this money. I don't really trust the markets in China. My real investment assets are outside of China. And, I don't really, and they would say things like, I don't really trust this regime. I've never really trusted this regime in certain ways. And it kind of left me asking the question, why is China, for all of the literature we have saying how stable cooptation is China kind of like Suharto's Indonesia, which I have books sitting on my shelf in my office published in 1997 and 1998 saying Suharto's New Order is really strong. And of course, it was gone, right, within a year or 18 months from those books being published. So is China, one financial crisis away from catastrophe politically and economically, or is it really enduring, much more like Malaysia, able to handle a crisis of that kind? And so as I got into thinking about certain questions that I explore in the book, why are private sector firms structured the way they are in China? Why do we have this persistent outflow of capital from entrepreneurs in China? Not just in the recent months, everyone's fixated on the current moment where these entrepreneurs are moving to Singapore and Australia and elsewhere, but over the entirety of, the 80s, the 90s, and the 2000s. And so I felt like I needed to get a deeper historical hold on that relationship between the party and the private sector, which did not start in the 1980s, right? So that's, of course, when reform and opening began with Deng Xiaoping in the late 1970s. But the entrepreneurs who took those risks in the 1980s, weren't born in the 1980s. They had a history of interacting with the CCP and the PRC that I think is quite relevant for how we think about the present. So as you say, the two main variables in the book that I use to explain these different patterns of state business relations are the historical relationship, trust or distrust between political elites and business elites, as well as the financial sector, which I'm sure we'll get into. But the historical part, and the reason why I go back to the revolution and moments of regime consolidation in the 1950s is to understand the pattern of interaction that those business and political elites have. And I argue that they are fundamentally distrustful of one another. And that is historically established based on those experiences in the 1940s and 1950s. So, when you think about what happened when the PRC took, or when the CCP took power and established the People's Republic, there were campaigns in the 1940s, again, for land reform against entrepreneurs and things like that. But then, once the regime takes control, right, of major cities in 1949, including, Chongqing, Shanghai, Tianjin, the industrial centers, they realized they did not have enough know-how about business, about trade, about the economy, and they had an urgent need to reestablish and rehabilitate industrial production. And so in the 1950s, the revolution, so to speak, or the process of nationalization of private enterprise was very gradual. And I'm not the first to argue that or discover that, right? That's in the work of Ken Lieberthal and others, Ken Lieberthal's book on Tianjin. But the process was, to slowly kind of incorporate these entrepreneurs, have them sublimate their skills into building the economy under the PRC. And eventually they end up kind of surrendering a lot of their assets because of some duress, but not necessarily extreme, punitive measures, right? There are exceptions here or there, but it was a slow process of convincing people to divest their assets and give them to the state, really with very little compensation, mostly because they feared being targets of the next campaign. And so that process of the early 1950s, which culminates in the period of the anti-rightist campaign, and the period of socialization, kind of sets this pattern of what I call accommodation and reprisal of the private sector that is repeated over history throughout the 75 years or so of the PRC. And the fundamental mode of governance in China, as many people have written, is the campaign. The campaign being a mobilizational, propaganda-driven, fundamentally uncertain process of trying to realize transformative goals for society. It's not based on rules and regulations that are clear and predictable, but nonetheless, campaigns move in waves, and Chinese citizens of all kinds are acclimated to this particular process. And so, you have a goal, whether it's socialization or rehabilitating industry or rooting out corruption or enforcing intellectual property rights. And you authorize, or the state authorizes various, parts of the state or outside the state to carry out that campaign. And people have become acclimated over this long history to trying to avoid being targets of these campaigns and to, in the words of Mike Oxenberg, get along and get ahead in the People's Republic of China. So they're very used to kind of pursuing their own interests and appearing that they're also pursuing the interests of the campaign, trying to, not be targets of these different campaigns in different ways. And so, but that's fundamentally uncertain, right? They never know if in 2 or 3 years they're going to be the targets of a new campaign. Even as, in the last episode, they were helpful to the regime, then they become enemies of the regime. And so as this is repeated over time, that distrust grows and grows. And the book offers all of these examples of ways in which, these elite families in the 1950s said, well, we have to do these things and we have to help build the new China, but some of us should go to Hong Kong and some of us should go, further abroad, because we fundamentally don't feel secure in this country, right, under this regime. And so as a result, I argue that a lot of business practices and a lot of the mental worldview, right, of these entrepreneurs has been fundamentally insecure over a long period of time. And that is why it seemed really important to go back to that founding moment.
Thank you. And I found it so useful that you did that, because once you set that historical context, right, once you frame that as an underlying background that drives current behavior, for me, I started to see, developments and behavior of the private sector in China today in an utterly new light, right? We look at the most dynamic periods of Chinese innovation and so on. It seems like things are moving so fast and China seems to have cast the past behind. But that's not the case once we read your book, because for me, I started to understand some of that fast pace, that frenetic, energy as let's seize the moment because the window closes, right? It's not just competitive capitalism, there's that definitely, but there's this fundamental anxiety of this window of opening, right? It's probably not going to be there.
And it's a double-edged sword in many ways, or rather, not quite a double-edged sword, but it has benefits for the Chinese economy, right? And I see that. So, I mean, what you're describing, I see it as manifest in short time horizons, right? So basically, we think in 3 to 5 years is the maximum amount of time in which we can plan for the future, because after that, the policy direction may change, or the emphasis may change, or the next campaign may come around and focus on a different sector and not my sector. And so all of these behaviors that have been pretty well documented in research on China's political economy, like, Dai Hongmao's wearing the red hat, right? The idea that entrepreneurs in the 1980s pretended to be town and village enterprises or other kinds of enterprises to keep themselves safe. Or in the book, I document a lot of FDI round tripping. So in the 1990s, the regime was welcoming foreign direct investment as a way to get managerial and technological skills into China. So entrepreneurs were sending their capital out and then back in order to access those preferential benefits. And so it is short time horizons, but it also does make entrepreneurs, for lack of a more professional term, very scrappy, right? So they're very, ear to the wind. They know how to interpret the propaganda. They know how to interpret the policy direction. And their closeness to the regime is not because of trust, it's because of distrust, right? So why do they want to kind of grow these relationships, whether formal or informal, with the party state, because they want the maximum amount of information at the earliest possible time period to help them figure out what the next direction is going to be. And then if you think about, the ways in which Chinese capitalists have been extraordinarily good at integrating into global supply chains, scaling up, scaling down, a lot of that really comes from being able to read the tea leaves in international markets as well as they were able to read them, with domestic policy changes. And so a lot of the dynamism does come from that political uncertainty, but it also creates these short time horizons that under certain circumstances can be pretty destructive politically and economically.
Absolutely. Yeah, double-edged sword, like you said. And on the term, as in terms of what you say, scrappiness, I think it's a great way to understand the behavior of entrepreneurs in China, and especially when in a way to understand the way they portray their relationship with the state, right? How it's portrayed is one thing, that fundamental mistrust is another thing. So how do we then understand when we see some of China's most successful entrepreneurs today? They broadcast their close ties to the state, right? They want to showcase that they have a relationship of trust even. So how do we understand this type of scrappy kind of showcasing of close relationships between the state and business? If there isn't trust, how do they manage to appear so close?
Well, it's corny, and I kind of hate doing this, but there's the quote from The Godfather, right? You keep your friends close, but your enemies closer. So I think a lot of what we've seen in terms of entrepreneurs running for formal office, entrepreneurs having those close informal relationships with political elites, we've kind of read that as cronyism. And it is cronyism. It's just that cronyism is too blunt of a category to really describe what these relationship dynamics are, and critically what their limits might be, right? So when you say, someone's co-opted or someone's a crony, you really need to ask yourself, well, at what point do friends become enemies? Because they do, right? And so it's very interesting, to see, and the book gives a lot of, I think gives a lot of texture to some of the anecdata, right? The stories that entrepreneurs have and some examples of different political elites. But you might think of, someone like Xiao Jianhua, who was sentenced in 2022 to prison, and who since the early 90s, the late 1980s, was the banker to China's political elite, right? So was the guy investing the fortunes of prominent political families in China. And you call him for sure a crony until suddenly, he escapes to Hong Kong and then is extradited from Hong Kong, under the cover of night under a blanket, right, from the Four Seasons, and then takes 5 years holding him in Beijing to announce charges and to try him. Another person like Guo Wengui, who is, Miles Kwok, very famous in American politics right now, who was very close to the regime until suddenly he's in exile in a penthouse in New York City and recording YouTube videos accusing China's political elite of all kinds of corruption and saying all sorts of true and untrue things. And so, people are close to the regime until suddenly they're not. And then, people who've done work on, why entrepreneurs run for a formal office, and thinking of Hou Yue's book on that subject, right, finds that the reason they do that is political insecurity rather than political trust, right? They want to find ways to list on their candidacy websites that they are, truly red, that they're really supportive of the CCP. And a lot of that is maybe they want to get resources, maybe they want privileged access to contracts or things like that. But a lot of it is, don't come after me, I'm one of you. And so, why do we think, right, entrepreneurs join the party, they do all these kinds of things? It's hard from the outside to observe trust versus distrust. And that's the really hard thing about it, especially from a social scientific standpoint, right? You don't have an easy measure of trust. All you have is behavior that reveals, right, how people think of their vulnerability. And that's what I focus on in the book, is those behavioral manifestations, such as asset expatriation. And another one, which is very critical to the book, is what I call weaponized information, or compromat, as it's called in many different places. And what's very interesting about that, and not only Hou Yue's work on that, but John Osberg, the anthropologist, has a great book called Anxious Wealth, where he also talks about this, that in fact, it's not necessarily that, they cultivate these political relationships just to get resources, but also to mutually implicate one another in corrupt activities in order to kind of inoculate themselves against persecution. So if you come after me, I know things about you. And so we find that in a lot of different behaviors of entrepreneurs and of political elites in China. So on the one hand, as you say, people have been, very vocal in saying, I support the party and I'm part of the political elite. On the other hand, some of their more secretive and informal behaviors are a lot more about vulnerability and making themselves immune to persecution in certain ways, because of what they know about other political elites, or because they have these ties to the party that would make it look bad if they went after them.
It makes so much sense once you unpack it, right? Because if there's fundamental vulnerability, then as the private sector, you need leverage. Right. So where do you get that leverage, right? It's the kinds of information and being close and implicating the other side that you talk about. So I wanted to kind of ask you to unpack a little bit, with this mistrust, right, as a constant and enduring vein that runs through China's political economy. How then do we understand the ups and downs of China's economic performance? So let's start with the success first, right? How is it that there's this fundamental mistrust between the CCP and the private sector? You would think it's an obstacle that's very difficult to overcome. But you show that it isn't, right? So how did China manage to achieve this, very astounding economic success, even in the face of mistrust?
Well, let me answer that first by saying what's right, but what the book is not about, and then saying what the book is about. Because I think I am making an intervention in this particular debate in a way that is productive. But first, fundamentally, it's the book. I'm not. A lot of what happened in the 80s and 90s was indeed very helpful for entrepreneurs, right? So giving this open policy space, a lot of ambiguity about what was permitted, what's not permitted, people seized those opportunities. And then what the book is not about, but is very important, right, is that, China had a very favorable external environment, right, got a lot of foreign direct investment, has a large domestic market, and was able to integrate itself into global supply chains and industrialize. There was also, I think that there's active debates within our field right now about whether it was CCP policymaking that caused anything good in China, or rather just backing off and let markets do their thing. I'm not intervening in that debate. The debate I'm intervening in really is about the role of finance. And that is what takes up really most of the book, is explaining what happens in authoritarian regimes when they liberalize financial sectors. That's what that's kind of where the book started, and that's what I became really interested in. So what's we've got a lot of literature in our field, as you know, explaining basically the puzzle of China's political system and its market system. So why is it in a one-party state you had entrepreneurs that were so actively, or rather you had local officials that were so actively pursuing economic growth, and that you also had state-owned enterprises alongside a large private sector? And so, how do you get this weird kind of, massive, in some words, miraculous, economic growth, clear achievements for this regime with these institutions, both on the economic side and the political side, that many people would think would inhibit that kind of growth? And the answer is usually about bureaucratic incentives, right? So, local officials were incentivized to pursue economic growth because it was good for their careers, or it was good for, their own, personal benefit. It was good for, the tax system and the structure of the public finance system, as well as the meritocratic system within China, incentivize that behavior. And classically, right, the argument is that, China's financial system has been a mess because it privileges state-owned enterprises, which are inefficient, and that private entrepreneurs, were excluded from the financial sector. So I twist the question a little bit and ask this. If there's so many incentives, right, for collusion between local officials who want economic growth and local business people, right, who also want profits. Let's be realistic about what business wants. Business wants profits, right? It wants to do well. And especially in a climate of uncertainty, then why did we get such productive economic growth, right? It makes sense to get, a lot of economic activity, but it ends up being wildly productive. And why is that? So the argument that I make, which is a bit different, I think, from what people in the field have said, is that actually the exclusion of the private sector, especially a distrustful and anxious private sector, from the financial system actually provided them with hard budget constraints and incentives to be extremely lean and extremely efficient. So, part of the book is about where do private sector entrepreneurs get the capital to either start up businesses or run businesses. And for most of the 1980s and 1990s, they had to get that capital, right, from pretty close sources, right? So either foreign direct investors who are, notoriously disciplined about where they put their money, or they had to invest based on retained earnings, which means they had to make something and earn something and retain those earnings and reinvest them. Or they got capital from friends and family or local business partners, right? Which obviously also wanted to get returns on those investments. And so you end up getting a very disciplined private sector as well as a very successful one, right? Which is, I think, a function of that financial exclusion, right? That gave them hard budget constraints. Now, if you had a financial sector that was fully liberalized, right, where interest rates are liberalized and lenders or investors are pricing risk, right, into the price of capital, then you might have that discipline from a private sector or from a financial sector as well. But what you mostly get in authoritarian regimes with financial sectors is not fully liberalized financial sectors, right? Why? Because they mostly want capital to go to friends of the regime or state-owned enterprises, and they're unwilling to fully liberalize these financial sectors. So this partial liberalization is what we get in China, especially in the 2000s. And so the argument that I make in the book is that initially this period of the 1980s and 1990s can be described by what I call mutual alignment, right? Meaning that basically the regime and the private sector business elites were all pursuing their own interests, which happened to line up. The regime wanted growth, private business elites wanted revenues, profits, right? Success. They wanted prosperity. And in fact, the incentives of the regime, partly based on, yes, public finance, the tax sharing arrangements, but also the exclusion of the of the private sector from the financial sector, actually led to this being both, growth oriented and highly disciplined. And so this period of rapid growth is explained in that way. But then in the 2000s, once the regime starts to liberalize the financial sector and you see some people getting privileged access to pretty cheap capital, you start to see it being deployed in all sorts of ways that are not necessarily efficient and become a different sort of state business relations that I call mutual endangerment.
So take us to that period then. So once the liberalization or partial relaxation starts to occur, you walk us through, various types of socially harmful firm behavior that starts to emerge. And once it's unleashed, it seems like it's very hard to then rein back. What are some of the types of harmful behavior that starts to emerge?
Right. So in the 2000s, and it's not, a big bang thing. There's a gradual liberalization of the financial sector, as well as some changes in public finance that make it such that local governments are more dependent on land finance and more desirous of investment capital than they are necessarily of productive taxes that happen, after businesses invest productively and then earn something, which really describes the 1980s and the 1990s. So you have a gradual liberalization of the stock market, of equity markets in China. So all kinds of state-owned companies start to list on equity markets as well as non-state-owned companies. And it's, with the pool of household savings in China, they have access to a large capital pool, right, if they are able to list on Chinese exchanges. And you also have a liberalization of the banking sector, not in terms of, having private sector banks allocate capital necessarily, but rather, many private sector business elites did start to get access to public sector banks, right? So state-owned banks that were lending more, especially if you were politically privileged. So if you're friends with business elites, then it's easier to get access to bank loans. And so the book describes that process and the ways in which entrepreneurs change the structures of their firms and some of their behaviors in order to benefit, right, from that period of liberalization. And I do call it mutual endangerment. And so in the book, I argue mutual endangerment occurs when you have fundamental distrust between political and business elites and a liberalized financial sector that allows business elites to use that distrust to get access to the financial sector and then start to do all kinds of things that are financially and politically destabilizing. So Mutual endangerment is manifest in three different behaviors, and they are the expatriation of assets. So basically, taking bank loans in renminbi at privileged rates, and then turning those renminbi into more secure euros or U.S. dollars, and expatriating your assets to hedge against your possible political future that may be disadvantageous to you. Weaponized information, which had been happening, throughout basically the PRC period. So and you see all these firms that are connected to political elites in ways that are really hard to discover, right? So David Barboza and his team, as well as Michael Forsyth and his team, they won big journalist prizes for figuring out how much money Wen Jiabao's family or Xi Jinping family is worth, right? And partly because it's not easy to discover, because it's all hidden in distant family members, friends of the family who serve as directors in these different organizations or have stakes in these different corporate organizations. And it's really hard to discover for a reason. It's meant to be hidden. It's meant to be this kind of weaponized information or hidden stakes. It's not this formal incorporation of the needs of the private sector. And the third behavioral manifestation, which I think is one of the biggest theoretical innovations of the book, is looting. And looting, I mean, the concept, is familiar, and it's been used economically in other work. But you get this fundamentally interesting behavior that I observe in Indonesia and in contemporary China, which is, why do you have private sector firms involuting their own assets, right? They're sort of stealing from their own companies, driving their own companies into excessive levels and unrecoverable levels of corporate debt. We might expect stealing from the company, right, embezzlement and this kind of fraudulent behavior from state-owned sector firms, right, where no one has hard budget constraints. But why would private sector firms do that? And they do it a lot in China. And so the book covers a wide range of acts of looting, right? So listing on stock exchanges and hiding all your different assets in different listed vehicles, and then tunneling those assets to another one, and then using them to enrich yourself personally at the expense of the firm. Or companies, you might even ask yourself, companies like Evergrande, right? Why was Evergrande so deeply in debt, and at the same time investing tens of, if not hundreds of millions, really hundreds of millions of US dollars in European and US markets, doing things like philanthropy or buying, football, soccer clubs, right, in Europe? Why were they doing things like that, right? While at the same time, their firm is fundamentally not sound, right? Issuing a lot of debt domestically and internationally. And a lot of that is really short time horizons. And so you just don't know if in the next 5 years, your business is going to be able to operate in a policy environment that will be advantageous to you. So you might as well enrich yourself in the short term at the expense of the long term. That's what looting really is. And so in the book, I think quite colorfully, I talk about, mafia type organizations, mafia type business behaviors, where they're fundamentally predatory within the firm and in their relationship with society, and consuming resources and preying on different people within the firm to maintain that kind of organizational behavior. And it's really dangerous politically and economically. And I think you only observe that kind of behavior if you have distrust and you have the ability of these distrustful business elites to access financial sector resources that they can loot.
That's so interesting. So I want to turn now to then how the Communist Party reacts, right? So from the perspective of the CCP, they're seeing widespread looting, weaponized information, asset expropriation. So from their perspective, when we look, now that you framed it this way, and when we look at what's been happening in China's financial system and financial governance in recent years, so not just the technology crackdown, but also the massive restructuring of the financial system that was announced last spring, it starts to make so much sense, right? You see this effort to exert discipline because of these negative consequences of partial relaxation over the previous decades. So then I wanted to invite you to maybe speculate a little bit, because it's so hard to kind of really say what the consequences of this reassertion of party state control how it might play out in the future. But from your investigations, as you see how the CCP is responding, to widespread looting and so on. They're trying to reassert the party's control over the financial system and assert a different kind of discipline compared to what was there in the 80s. How do you see it playing out? Will it be effective? Will it inject confidence? Will it deepen mistrust? Will it alleviate mistrust? Or how do you see things playing out in the coming years?
Right. Well, let me say three things about that. So first, just anecdotally, it's very funny. A friend of mine in China, who was a private sector person, said, they're not going to like your book in China. They're not going to like your book in Beijing. But actually, if they read it very deeply, they would see it's just a justification for Xi Jinping's policies, and they should like it. And I sort of laughed. I have no comment about whether they should like it or dislike it. But yes, I think so. The first point would be that a lot of the crackdown that Xi Jinping has been carrying out for the last, I'm going to say basically 7 years, not for the entirety of his tenure, because actually Xi Jinping in 2013 and 2014 was promoting stock markets, equity markets, was promoting that, capital should go to private business. And boy, it did, right? And they were using campaigns about kind of supply side reform. They were using campaigns such as even Belt and Road to get, assets out of China and to get assets their way, get financial capital their way. And then you have this turn really in 2015, 2016 with the stock market crisis, with the rapidity with which assets were going overseas, and not just through Belt and Road. And there's this part of the book that talks about actually outward foreign direct investment in China and China's external balances in general. And it's very interesting if you look at China's outward foreign direct investment compared to the errors and omissions in its balance sheet, so money leaving China illegally, it's about the same every year since 2013. Meaning, for every dollar that was going out in foreign direct investment to invest in, some infrastructure project in Southeast Asia or in Africa, a dollar was going through a suitcase or a Macau casino and finding its way into, say, Vancouver real estate or European hotel chains, right? And so in 2015, there's both a stock market crisis, where they start to, see, this kind of financial instability that they're not sure they're willing to tolerate, as well as this crisis in the value of the renminbi. So they go from this long-term policy of trying to suppress the value of the renminbi relative to the dollar in order to protect China's export competitiveness. These are the American debates on China's currency manipulation, to trying to prop up the renminbi because so many assets are fleeing China and they don't know where these impetus, where they don't know where this is coming from. And so then, especially in the wake of that stock market crisis, they started to, in 2016, discover the extent of corporate debt in China. It's the first time they start talking about these issues, and everyone's obsessed with the real estate sector right now. Of course, my first book was on land finance. And so I'm also very interested in that. And there's a lot of, local government debt in China, but there's also a ton of corporate debt, an absolute ton of corporate debt in China. And in 2016, you start to see some business elites being detained, some, more permanently, some on what I call catch and release, where they're detained a couple times and then never charged with anything, or they're asked to, for example, in the case of Dali and Wanda, unwind some of their international positions and domestic positions to reduce their corporate leverage. But you find basically this discovery that not all is well in the Chinese financial sector. And so the crackdown on private sector elites, I would say, started in 2016. And it started from this fundamental place of fear from the CCP that financial instability was going to be a source of social instability. And, it might have been a reasonable fear. They put, actually in 2015, the national security law put financial stability in national security terms for the first ever time. And they do start to reassert that kind of control. So the second point is that how they reassert that control is very interesting, right? So over the last year or so, as you mentioned, we've seen an emphasis on party building and party control within financial supervision. And so a reorganization of China's financial supervisory structure and regulatory structure, to centralize that supervision and put it more firmly in the hands of the party rather than state bureaucrats, which is where it was really from the early 2000s until 2015, 2016, and especially until recent years. But we start to see the idea that it's really political supervision that has to be the most fundamental thing. And alongside that political supervision is coming the rise of corporate shareholding on the part of the party state. So we're seeing massive use of party state financial resources and personnel resources inside firms of all kinds in China. And so chapter 7 of the book really shows the extent to which the party state and state-owned companies, et cetera, are taking small minority shares in a lot of Chinese non-state companies. And many people have emphasized that that's really for industrial upgrading, made in China, 2025, and kind of in strategic sectors. But I also show it's not all in strategic sectors. It's in many companies that that maybe are locally relevant in different ways, and big employers or systemically important, but they're not at all in strategic technology sectors. And so this corporate shareholding gives the party state a line of sight into what businesses are doing. And that's how it's justified also in government documents. And so the form of that discipline, as you put it, which I think is the right word, right? Discipline is very important. Is also, I think, really critical to how we understand what the PRC is trying to do with its financial sector now. So party supervision and serious corporate shareholding to institutionalize that supervision. And the last point that I'll make is that I think it's a little bit overemphasized the extent to which Xi Jinping is ideological. And this is a very live debate. And just to be provocative, it's very interesting to see how many people are saying, he's reinstalling socialism. He's a committed communist. He's committed to nationalized ownership and, common prosperity. I actually see it as much more driven by the desire to discipline capital rather than to eliminate capital. And if you look at what he says, that's also what he says, right? There's been a disorderly expansion of capital. I think the emphasis should be on the disorderly rather than capital as a word, right? And so, all kinds of systems, there should be a green light for this capital, a red light for this kind of capital, yellow light for this kind of capital, that it's not really about socialism or communist ideology. It's about the power and discipline of the party state and its monopoly over political power within China, rather than about this kind of ideological thing. And it is a reaction to what's happened in the past. So the question you asked, though, is what will be the future of this, right? Is it likely to work, right? To discipline business or to kind of pave the way for a new era of the financial sector in China? And let me emphasize that China is trying to do what basically no regime has ever done, which is no authoritarian regime, which is to have a modern financial sector without political competition. And there's a reason why modern financial sectors don't tend to exist in authoritarian regimes. Because to function efficiently, financial sectors require accountability, transparency, rule of law, independent judiciary. And so what China has had over the last 20 years is a financial sector that there's kind of two rule books, right? And you'll hear them say this. Xi Jinping says this all the time. Li Qiang is saying it, Lou Jiwei said it, all of these different people have said this, which is, okay, well, we want a financial sector that's functioning via transparency and where there's minority shareholder rights, et cetera. But then clearly, many of the listed firms are state-owned firms, and no one's under the illusion that those are actually governed by their shareholders. We know what their bottom lines are, right? They are controlled by the CCP, right? And they have political bottom lines as well as, modern kind of corporate bottom lines and things like that. And so you can't have this system where some firms abide by some rules and some firms abide by other rules. And so you end up having not rule of law, not transparency, and not accountability. And so now they're trying to get that discipline from the party itself rather than from open markets and from the rule of law. And there's this dance of kind of opening the private sector, opening, the economy to the private sector and opening the financial sector, and then a crackdown. And my ultimate view is that this will not be successful. And the reason is that it's only exacerbating that sense of distrust. And so what we see in the Chinese economy right now, this massive slowdown, which, the regime says this is intentional and it's structural. think there's some truth to that, right? There is a reconfiguration of the economy from this excessive emphasis on investment and of real estate development to something more innovative, more productive, more driven by domestic demand. So there is a legitimate kind of restructuring going on in the Chinese economy. But if you look at the data, right, investment is down, right? Sentiment is very poor. And a lot of that is because entrepreneurs, as well as, workers in all different ways, this Tangping lie flat movement, right, are unwilling to put themselves on the line in a climate in which they just endured this massive crackdown. And so you see, first Li Keqiang, then Li Qiang, inviting all the tech entrepreneurs and saying, it's great, it's safe now, right? Everything's fine. And they're not so sure, right? And so every cycle of accommodation and reprisal just further acclimates entrepreneurs into that sense of distrust. And so they kind of want to have this financial sector that's run by party supervision, where discipline comes from crackdown. And I think that's fundamentally at odds with the kind of long time horizons that you need for successful financial markets and successful businesses to be built. And so I'm pretty pessimistic that economic dynamism is going to come from the private sector in ways that are not destabilizing politically and financially in the near term.
Thank you so much. We could keep talking into the night, but I'm a little bit
late for you.
Cognizant of the clock. So with deep reluctance, I guess we should call this conversation to a close, at least formally. But thank you so much, Meg, for taking the time to talk to us about the book. And I should add, this is only one slice of the book, right? We haven't even talked about Malaysia and Indonesia, which, in and of themselves are fascinating cases, but really put the Chinese case and the Chinese situation in a really, I think, fruitful and fascinating light once we start thinking about, what's uniquely Chinese. And there's some parts that are uniquely Chinese, but some parts that are not as well. But I'll leave that for anyone watching, for anyone watching this, just as a teaser to say, go buy the book. There's loads more there that we haven't had time to delve into. So thank you so much.
Thanks, Yeling, for spending all the time with the book and for being willing to talk about it. I really appreciate it. It was fun. It was fun to work on, but I do want people to read it. So thank you.
It was a huge pleasure to read. So